What is going on, YouTube family? Welcome back to another episode of Swing Trading Day Trading Technical Analysis on the NAS100. I hope you guys have had an amazing week of trading. Last week just gone, it was a bit dicey, but I hope you guys made it through with profits, right? And what we're going to do is we're just going to pick up from where we left off in regards to the analysis that we did last week and where I think market is going to go this week for week commencing the 4th of March, right? So with that covered, we're just going to get straight into it. So I'm just going to make a few little adjustments here and there, and then we're going to be straight into it. So first thing is that this little separator, well, the vertical line, I just need to move that over to cover the Friday, so it's from this week opposing to where we left it off. So I'm just going to click into that, make sure that's saved nicely, right? And then we're just going to briefly cover what I talked about last week and what market actually did. So last week, at the end of last week's video, I pretty much talked about traders, especially those that were buying in continuation that price was going to be going up. I was of the assumption that they've been trapped in this zone and that price is going to come down. And naturally, price didn't come down, okay? It actually went up. So it wasn't trapping anybody. It was just an assumption. It didn't work out, such is life, right? But price obviously pushed up. Now, during the week itself, I was predominantly in a sell position, right? So what happened was, going back. So on the Monday, I took a sell position up here, right? Took a sell position up here. And so Monday was great. I woke up on the Tuesday, I was in profit. It was amazing. And then during the Tuesday, I went back up to break even, okay? And then during the Wednesday, I went back into profit, and then I was still in profit on Thursday, at which point my trailing stop was triggered and then price flew up. So just to give you a bit of an in-depth explanation as to why I did what I did. First things first is, so around Tuesday, I realized that price had gone into a range and we was looking at a descending flag or a descending wedge, whatever way you want to call it. That's what we had going on. Now, if you can't spot that, this is what it is right here, right? So this is the descending wedge or the descending flag, right? So this is how it looked. So once I identified that was the situation, that's what we had going on in the market at that time, okay, I now needed to start preparing countermeasures for the possibility that price could move against me, right? Because one of the things, if you have been watching my channel for any period of time, is that you realize that, or reading technical analysis books, right, is that the descending flag has a high probability of pushing to the upside, as we can clearly see what's taking place here, right? So knowing that that was the situation, okay, what I had to do was I had to start figuring out how I was going to protect my trade. So I'm just going to make this a little bit smaller, right? And I wouldn't say I got it dead on the peak. I'll probably say I got it around here somewhere. That's where I entered in. I didn't get it dead on the peak, right? So what I did was, my first trade, I had this area right here as my stop loss, right? Covering the previous weekly high, which was set on a Friday, right? And then as the day moved on, because I basically realized I was in a range on the Wednesday. So either Tuesday or no, I'll say Tuesday evening was when I realized I was in the range, right? So on the Wednesday, I had to start preparing to start protecting my trades. So, and what I normally do when I use trailing stops is something that I started doing recently, is I don't apply the trailing stops on the day, but I apply it at the end of market if it goes in the way I want it to. So let me get rid of this one, and we're just going to use a different level to kind of highlight that. So let me just rejig this up a bit, just make this nice and thick so it really pops for you guys. So we're going to use this level over here as my trailing stop. That's my trailing stop, right? So when I first placed a trade on the Monday evening, this was where I had my stop, pretty much covering the high on the Friday, right? At the end of Monday, right, I kept my trading stop where it was because I was fairly confident it was going to go down, and I hadn't realized we was in the range yet, right? So when we got to say Wednesday evening, that was when I realized we was in a range, and then I moved my stop down here. So therefore my my risk was a lot smaller than it was at the beginning of the trade, right? So then when we got to when we got to the end of Wednesday, this was when I moved my trading stop from where it was and I brought it down here, which means I was just in a little bit of profit, okay? And then at that time, due to the amount of time I've spent in the market, I basically realized that price is going to do something very, very, very soon. So I had one of two options. I could keep my stop there at just a little bit of profit and just let market do what market's going to do, right? Or I could say, you know what, I'm going to cover this area over here, and this was all done on a Thursday. So I'm going to cover this area over here just to lock in as much as possible, and if price shakes me out but still looks like it's in the range of the descending wedge or flag, then I will reposition myself with another sell up here to ride it downwards again, right? Because at the same time, one of the things that I was kind of looking out for was that this weekly low had been closed, and it was a really big move to the downside to close off that weekly low, supposing to the weekly high that the wick just peeked through. So I always took this as the strongest signal, supposing to the signal I got up here. So I was still very much bearish on my moves, right? So on the Thursday, obviously, whatever, I think it was market news, I wasn't really paying attention to it that much, right? But either way, price shot all the way up and took me out with a small amount of profit, right? So when price took me out, I didn't do anything. I could have gotten back into the market again at around this level, but I said to myself, first things first, I'm going to wait for either the weekly high to be taken out, since it looks like it's heading in that direction, and once it takes it out, that's when I'm going to look to take a position in the market, okay? But either way, I was still not sure about what was going on, especially on the Friday. So on a Friday, the move happened, right? The weekly high of the previous week was taken out. Then price flew all the way down, gave us a discount, and began to push up. So what I basically did was a nice simple move, right? It was a nice simple move, one day strategy, worked out really well, and I'm happy with that result. Just gonna make this one a little bit thinner, right? So what I did was I waited for price to close above the previous swing high, which is this over here, and then on the next candle I would take that one, and that's exactly what I did. So I locked in this area as a buy, and I rolled it up, and I got out around 8 in the evening, so that would have been this wick over here, right? So 2 trades last week, won them both, and all of them followed simple rules and simple risk management that I was able to execute properly, and I got rewarded for it. So kudos to me for getting it done right, okay? So with all of that covered, we're now going to get into the business of the analysis for this week coming, which is going to be Monday, the 4th of March, right? So let me just get rid of all of these things that we've got here, because we don't need those anymore. Let's just get rid of all of that. And also let's get rid of this, because this didn't work out. Let's get rid of that as well. Let's get rid of that. Okay, let's get rid of these two as well. We don't need those anymore. Okay, I think that's about it. Okay, I think that's about it. It's all cleaned up. Oh, let's get rid of this one as well. Don't need that either. Okay, right. So for week commencing the 4th, I'm looking out for the same things I've been looking out for the previous weeks moving forward. And like I say, this concept of using the weekly lows and the weekly highs as a guide, it's not a plug and play system. It does require work, and it may be quite advanced for newbies. So for that, I have backtesting videos that you should be seeing at the end of this video. So you should see a thumb. It has a series of 21 backtesting videos, backtesting with indicators, okay? And there's useful information in that. So you might find something in it that could actually help you on your trading journey, right? So I highly recommend you go and take a look at those videos, right? But until then, let's just carry on with what we're discussing. So as it stands, I'm looking out for the same things that I'll always be looking out for in all of the videos that I've been sharing with you guys, which is the weekly lows and the weekly highs being taken out. So weekly low over here was set on a Thursday, and the weekly high was set on the Friday. These are the two zones right here, right? These are the two zones that I'm keeping an eye out for. If price takes either one of them out, I'll be making a decision. Sometimes I may make a decision without them being taken out if I'm fairly confident that I have an idea what direction market is going to be moving in, right? So it's not set in stone, but if you're new to this concept, then I would strongly recommend you use the weekly highs and the weekly lows as a guide. And once again, I'm not a financial advisor. I'm not giving you financial advice. You are required to do the homework on this to make sure you fully comprehend what I am showing you before you commit your hard-earned capital to it, right? So on the high side, the level that we're looking to get taken out will be 18339.2, right? And on the low side, the level that we're waiting to get taken out would be 17791.7. If either one of these levels is taken out, I'll be taking a position in the direction that has been taken out, because in my opinion, it will hold the highest probability that price wants to move in that direction. It doesn't always happen like that all the time, but in most cases, that is what it does. And that is what I'll be aiming to do, okay? So, one thing that you'll notice with my technical analysis videos is that I'm not big on resistance and support levels. It's not that I don't believe they work. I just believe weekly highs and weekly lows are a lot stronger than resistance and support levels, in my opinion, right? And that's just my personal opinion. I'm not saying that whatever way you're doing it is the wrong way, because I don't know how you're doing it, but I'm just saying that looking at weekly highs and weekly lows tends to give me the results that I'm looking for, and I'm winning way more trades than I'm losing at this moment in time in regards to how I'm navigating, and it's only because I'm using this system of the weekly highs and the weekly lows, right? So with that covered, the next thing that I want to bring to your attention is, I mentioned it briefly, is the backtesting videos, okay? So right at the end of this video, there is going to be a series of backtesting videos, and the design of those the concept of those backtesting videos is to help you kind of figure out which indicators will work best for you and which won't work best for you. And I've backtested a few of them, and how I kind of treated the backtest is I looked for the most effective way to get you the most amount of profits just by following the direction they offer, and they're all in the backtesting series. So I would strongly recommend you go check them out if the weekly highs and the weekly low concept is a bit over your head in terms of how to actually navigate it, because there are times when it will screw you over. I'm not gonna lie, it happens, right? But however, at the same time, for me personally, this is the best concept that I've come across so far. But however, you can use the indicators, and that's done in the back test. So I definitely think you should go watch those, right? And the one that resonates most with you, okay, go back test it until you've got it down to a T, and then you can then run with that idea. All right, it's all there for you. It's for free. It's right at the end of this video, and you should be seeing that right about now. So with that covered, once again, I want to wish you all the best in your trades for next week. And this is Pips and Points signing out.